everyone, Joshua Hayes at bigwavetrading.com. We're going to do a quick market review, and then I actually have 3 actionable recent earnings winner long signals this evening to take. But before we get into it, let's talk about the overall market. If we look at it on a weekly time frame, there is absolutely nothing wrong with this uptrend. We're above the 9. Well, we're at the 9, above the 21, above the 50 SMA on the weekly time frame. The time segment volume is switching bearish. It's still above the 0 line. So remember, this background color can be green if the TSV is below the 0 line, and it can be red if the TSV is above the 0 line. So the 0 line, I should make it more green when it's above the 0 line and positive, less green when it's below, more red when it's below. But overall, the overall line is above the 0 line, but short term, we are red light, red light. Keep it simple, guys. Green light means go, red light means slow. Green light means go, red light means slow. You got 2 green lights, good things can happen. You don't need both green lights all the time, but when the overall trend is green, good things happen. When the overall trend is red and red, bad things can happen, like back here. But you'll notice this pullback here, we were red here, but we didn't flip red to the very end, then we go green again. So there's no confirmation, but short term, we are red and red on the weekly, but price action is good. Long term, I'm still bullish. I'm very bullish, and every dip is a buying opportunity if you have a 20-year time horizon. I cannot explain how important it is to never buy the bearish narrative in a secular bull market. Demographics is everything, and demographics isn't going to turn until at least 2035, more than likely not until 2040. So there's a long ways to go. So I want to make it very clear. I'm very bullish long-term, bullish intermediate term, but shorter term, using the daily time frame, we cracked that 21 EMA hard. We're now at the 50. If we can get below the 50 and get this tickets indicator above 0, I'm all in on a reclaim of the 50, risking the recent lows. Had this indicator been above 0, a buy stop goes above the 50, and you're long this entire move. The same thing here, but it just so happened both times the tickets indicator was below the tickets indicator was below 0 while this price was below 50. So that's what I'm looking for to really get it to line up and get me, super long. But then the next area is this 200 SMA. Any dip below the 200 SMA and reclaiming, if it's uptrending, is a long signal with or without any of the indicators confirming. And as you can see, good things happen. If this would have triggered and failed, our stop is right below this low. But any dip below and reclaim of an uptrending 500 exponential moving average or a 200 SMA is all in signal. It can also be all in if I got that tickets indicator above 0 with a dip reclaim of the 50. Now, recently I started back testing with the 21 EMA and it works, but this year in 2024, we can't even get that to line up. Welcome to 2024. It's just been that kind of year. But on a daily time frame, the SPY is below the 21, and once again, the tickets indicator was already trending red. We are now slightly below 0. It's not by much, but we are technically below 0. And we've had a red time segment volume indicator as well. So once again, just using it in a simple way, green and green means go. And as long as one of the indicators are green, as long as it's trending higher, it's good. But when it goes red and red, bad things can happen. When it goes red and red, bad things can happen. Red and red, bad things can happen. But as long as one of these indicators is green, if the other one is red, it doesn't matter as long as it's trending above the 21 EMA. But as you can see, short term, we are red and red, okay? Now, if I go to an hourly time frame, which is granular as I get, I don't get any more short term, we can see we're also in the very short term still red and red. This tickets indicator crossed the 0 line way back here. What day was this? On the 23rd of October. You see we got above the 50 SMA, but the tickets indicator is below 0. Per this rule, price should not be above the 50, especially if it's downtrending, if this indicator is below 0. And whoop, little sell-off. From that sell-off, we're still trending lower. We're double red. There's no reason for me to be bullish short term, okay? So we understand that. Daily, weekly, and hourly all tell us, this is the hourly, red and red, this is the daily, red and red, and this is the weekly, red and red. It's telling us short term, risk off. And confirmation of that has been the rising TNX 10-year Treasury yield. I'm not going to pull it up here, but I believe it's at 4.36% right now, which is a new closing high. But what I want to show everybody, HYG was weakening while the SPY was hitting new highs, warning that something might be, I guess you could just say, not right about the uptrend. We are now fully rolling over, breaking below the recent support level, and we're double red on the daily, and on the weekly, we're double red. So we're double red on the weekly, double red on the daily, and we are double red on the hourly. But the HYG is breaking down. So you can see the HYG chart. So you see how SPY was going higher here? HYG was telling us to be ready that the SPY might do what it's done. And as of right now, everything is saying risk off short term. Does it mean it's going to stay that way after Monday's session? No. On Monday, if we're up 5% across the board on the biggest volume we've seen all year long, I'm going to change what my opinion is based on a hypothesis, based on evidence, facts, data that's in proof that's right in front of my face. So right now, I have a risk off kind of mindset short term. That being said, am I still going to pass on new long signals? Absolutely not. Because weekly, we're still above the 21 EMA. We're about to break out on the VIX, which wouldn't be good. If we break out above this 23, 24 level, that would not be good. And we're above 20 on a closing and intraday low basis for 2 sessions in a row. That's not good short term, but nothing is ugly yet. So until it gets, I am going to keep taking new long signals. But what I will do is, if my recent trades aren't working immediately and I'm taking small losses, like I have been doing a lot lately, and by small losses, I have a 50% end of day sell signal for a negative 1% loss. I have another 50% end of day sell signal for a 3% loss. I had 3 recent long positions fail. The losses were negative 5%, negative 3%, and negative 2%. So we're keeping the losses small, and the capital at risk gets reduced, either via the way my recent long signals are performing, via the quality of the long signals when they trigger, and or the overall market. And right now, the overall market on the short term is indicating some weakness. My recent long positions haven't been great, and I haven't received any grade A signal. And I'm going to remind everybody, this was not a grade A signal, but it was damn close. Why? Only one red balance of power bar on the chart. There are a couple of tall red volume bars, but basically it's green on the bottom, green in the middle with pocket pivot point signals, green at the top. And this chart looks really good. It still wasn't a grade A signal, but I don't have setups like this that are then leading to moves like this. So it would be great if I was getting one of these every week, but I'm not getting this kind of quality chart setup. And then if I do, very few are doing what Prax is doing, which is basically moving up without either shaking me out and or failing. So the quality of the long signals need to be grade A quality or close like Prax when I went long here back in June, and or the market needs to be uptrending, and or all my recent long signals need to be working. Right now, recent long signals are not working. Grade A setups are not there, and the market is showing weakness. But that being said, I still am going long stocks that are doing well. So let's review some. CFLT, Root, and SHAK can all be new long signals. I am not reducing size or increasing size after today's session, but I have reduced size recently. I personally use the anti-martingale methodology. So if I'm risking 5,000 per trade after a losing trade, the next trade I'm risking 2,500. The next trade, if it's a loser, I'm risking 1,250. And then let's say the next trade's a winner, back up to 2,500. Let's say that trade's a winner, back up to 5,000. Let's say that trade's a winner. Now I'm risking 10,000 per trade. So that's how I operate. Right now, I'm on the reduction size. So SHAK is a nice earnings signal. If I use the low of this kind of gap up area, I just think that's too tight in this market. Root, same situation. If I get long above the closing and the high day price and get a position, I think if I risk to here and calculate my size to here, that's too high of a probability of having that triggering, filling, and failing. And the same with CFLT. I believe if I get long above the closing price and the high of the day and I calculate my size to this low, that's just the odds of it triggering, filling, and failing are too high. So what I'm going to do to account for the volatility in this market and the mixed messages in this market is threefold. You can take the one you like the best. Maybe it's Shake Shack. Maybe it's Root. Maybe it's CFLT. They all are Cansom quality. CFLT has a 96 composite. SHAK has a 95 composite. Root has a little bit less of a composite, but has massive revenue growth in the most recent quarter after a stellar earnings report. So what I'm going to do on all of these is use the 21 EMA. Now, I think that might be too much on this one, so I think I'm going to use this. We'll see. For right now, let's just use the 21 EMA. So with SHAK, my game plan on SHAK, on all three of these stocks, I'm going to risk the exact same dollar amount from my entry to the 21 EMA. I'm going to split the entry orders above the closing price and above the high of the day using buy stops. If it triggers and fills, whatever that low a day is on the day that it triggers and fills will be my first stop, second stop, and then I'll leave a final stop all the way down to the 21 EMA. The same thing will be for CFLT. I'll split the orders in half of it above the closing price, half above the high of the day. Triggers and fills on Monday, whatever Monday's low day is after that trigger and fill, first stop, second stop. Then I'll let a third of the position work all the way down to the 21 EMA if it wants to. Now, if it reverses on heavier volume, I lose that green balance of power, then we'll move up the final stop. But for now, we'll give it room to work. And with Root, it'll be the same thing. No position on this one. Now listen, you can do this anyway. You can take all of your capital and focus on any one of these trades. And if it goes red to green and you're long, and it happens to go re-red again, you just cut your loss and you wait for the next signal. I'll have another one on Monday. I'll have another one on Tuesday. I got 3 tonight. So with Root, I will be using the 21 EMA. Half will get triggered above the closing price. The next half will be above the high of the day. Whatever Monday's low of the day is after that triggers in, first stop, second stop, final stop down here. And then if it trims and trails all the way down there, letting the 21 EMA catch up, we'll definitely have a reduction in size. But the main point of doing that is if I risk, let's say $10,000 on each position, if it triggers and fills, I'll be risking from here. And the chance that they'll trigger, fill, and fail the 21 EMA is basically 0. So 3 new long ideas for everyone: Root, CFLT, and SHAK. All earnings winners, all Cansom quality. Which one's the best? Well, SHAK, I love that relative strength line. CFLT, I don't love that relative strength line, but the industry group relative strength line is amazing. It has an A+ in market surge. I think it's number 12 overall. SHAK's industry group, I think it's over 100. Root's industry group, It's a little bit better, but I think it's still around 70. So if I had to go by relative strength, it's SHAK. If I had to go by group relative strength, it's CFLT. It's all splitting hairs, guys. Take what you like the best, leave the rest. If you hate CFLT, you focus on SHAK, you focus on root. If you hate root, then you focus on SHAK. If you hate SHAK, you focus on root. If you hate both of those and you like CFLT, you focus on CFLT. Me, in this tape of constant rotation, constant bifurcation, and how fast it happens, I'm going to take my shot at all three. What works, I keep. What doesn't, I get rid of.